Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on CyclesMan.com. Welcome back to the show, Tim, and Happy New Year.
Happy New Year.
Tim, we have stimulus packages coming from governments, all kinds of aid programs and so on. Are they going to power the economy to success in 2021?
Looking at the data, I don't think so. I fail to see how a $600 check is, $600 is $600, but it's not going to make, is it going to make a difference to you? I know you're in Canada. I'm just saying, we have bigger problems than I think a $600 stimulus check or a $2,000 stimulus check can solve. Before knowing we were going to do the interview today, I wanted to look at just some key, it's been a while since I've looked at it myself, but I wanted to look at some key economic indicators, if you will. So I got kind of a list here on that note, and just to run through some of these, in the employment level. Yes, it has improved. It has bounced up. But when you look at the growth rate, it's at the lowest level since the inception of the data, back in which this data begins in 1950. And so what you have is a zero line, and then you have, the ebb and flow above and below the zero line. And we've bounced up from the lowest level since the inception of the data, and we're still, in spite of that bounce, below the 08-09 low, and at the lowest level on the history of the chart, to try to let someone, visualize what I'm looking at. So while on the one hand, okay, there's an improvement, it's minuscule. To confirm that data, let's look at another cut of the employment data, and this one is total non-farm payroll, which is a measure of about 80%, it says, of the workers that contribute to the gross domestic product. And here what we see is, yes, there's an upturn, there's an improvement, but the growth rate is also at the lowest level, and this data goes back to 1940. It's at the lowest level since the inception of the data. And I'll add to that, and we have talked about this numerous times, but, this non-farm payroll, the employment level, it peaked in February 2015. And not only did it peak in February 2015, has been contracting ever since, but the bounce into that peak in February 2015 was at the lowest level. In other words, it's the weakest bounce since the inception of this data, again, going back to the Great Depression. And we're recovering from that. You see what I'm saying? I mean, it's a complete collapse out of the weakest recovery since the Great Depression. And we're at the lowest level since the inception of the data. So there's no evidence of a real recovery with the employment numbers. If we look at the unemployment rate itself, and by the way, I'm getting this data from the Bureau of Labor Statistics. And yes, it's come down, but it's at the highest level since the inception of the data. Again, in this case, it goes back to 1950. And another one I found interesting when you kind of dice and slice the numbers and look at this, everybody's familiar with this one, the labor force participation rate. And, net, if you look at this and do the math, first of all, we're at the same level that we were at in May of 76. And so net, there is 41 million more people unemployed than there were in 1976. We've had a 47% increase in the population in this country, 106 million, but we have 41 million more not working. So, you know, I think those numbers speak for themselves. And what I'm trying to say here is that this one number confirms the other that confirms the other. And then along those lines, we look at initial unemployment claims. Yes, they've come down. Absolutely. They've come down. But they're still at the highest level since the inception of this data in 1967. So it's kind of like, you know, okay, the flames aren't shooting out of the roof of the house 10 feet. They're only 6 feet or 3 feet. But the house is still on fire. And so, again, what I'm saying is we're not exactly seeing what I would call a recovery. And then looking at that same sort of data from another angle, we have this is continued claims. And again, it's at the highest level. Now it has recovered. It has come down again, but it's also at the highest level in this case, since the peak in 2000. It looks like it peaked in, I don't have the date there. I think it was May of 2009. So it's at the highest level since May of 2009, which besides that point is at the highest. In other words, what I'm trying to say is besides that May high, it's at the highest level going back to the inception of this data, and I think it was in 1967. And then to look at the economy from a slightly different angle, leading indicators of the gross domestic product, again, they bounced, but they're at the lowest level since 1960. Looking at, everybody talks about the Fed printing money and lending and money being in the, you know, money being the system being awash with this liquidity that the Fed is printing. Well, if we look at this, at the lending and really what's going on there, I'm not seeing that. I fail to see it at all. The net percent of domestic banks reporting stronger demand for commercial and industrial loans for small firms, it's at the lowest level and still declining, and it's at the lowest level since 2009. If we look at that same data for large and medium-sized firms, it's at the lowest level since 2010. If we look at consumer credit, which, by the way, it mirrors, if you will. I say mirror. It's almost the same as the employment numbers, except this led a little bit. We have, looking at the growth rate, you have a zero line, and then you ebb and flow above and below that zero line. And coming out of the 2009 low, this consumer credit peaked in November 2011. And it started contracting. It's been contracting ever since. So again, that showed that that recovery, the post-2009 recovery, was not only weak, but looking at this data going all the way back to the 1940s, it too shows that it was the weakest recovery since the Great Depression, and it continues to contract. So again, we're not seeing the demand for money there. And then when we look at one more, we look at the domestic. This is the net percent of domestic banks tightening standards on consumer loans. Again, it's turned down, but it's at the highest level since 2009. And so every way you look at this, one piece of data confirms the other. And, you know, as I look at it simplistically, and which is what I'm trying to do here, is that no matter how you look at it, if people aren't working and the banks aren't loaning, then how is the economy recovering? I mean, that's pretty elementary. I don't know how you can break it down and make it any simpler than that. And I think you'd be hard pressed to dispute that. Not that you would try. I'm just saying. I mean, that's pretty basic economics. But anyway, on top of that, as we face, move into 2021, we face more lockdowns, more restrictions, more of this COVID stuff, and all the while, we see the markets continuing to be used as cover for the rotting economy.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, taking a look at the stock markets, are they going to continue to set new record levels going into the new year?
You know, I don't know. The answer to that is this. What I've come kind of full circle, if you will. You know, I've looked at the data, trying to gauge. You know, I say gauge. That's the wrong word. Just trying to look under the hood at this economy, and I started doing that probably 18 months ago, looking at some of this fundamental stuff and really veering out of my lane from the technical perspective, but looking at this stuff. And I've come back to the conclusion that all of this economic data, no matter how bad it is, I mean, we know it's bad, we know all that, but it comes back to the cyclical structure of the market. And until we get, not to sound like a broken record, but it's just a fact. I mean, none of this matters until it matters. Well, how do we know when it matters? It's going to matter when we get a cyclical setup for this market to turn. And we've seen that attempt on a number of occasions. We saw it in January and February. I saw it set up, wrote about it in the letter, called it, and we did get a crack indeed. I mean, it was a pretty swift decline. Everybody's forgotten about it. But then the powers that be, they come out and they're able to save it again and again and again and again and kick the can down the road, as they say, and use it as the cover story that the economy's great. And we keep proving, looking at this data, that the economy's not great. There is no real recovery. And yet the market continues to linger. So how long, I guess the real answer to your question, or the real question, in fact, is how long can they continue to play this game? And I don't think any of us have that answer. But what I have come to learn is, regardless of how bad the employment rate is, regardless of how bad or how tight the lending standards are, or how little money the consumer is, how bad consumer credit is contracting, or however you want to say it, regardless of how much stimulus they send, or regardless of all of that stuff, it all comes down to none of that's going to matter until it matters, and we're going to know when it matters when we see the cyclical structural setup in the market, and understanding what that setup is telling us at the time it presents itself. And so that's the best answer I can offer to anyone, and that's what I'm looking at, every day, and reporting in the short-term updates and in the letter. And just like we saw it in January and into early February, whenever it happens, if it's next week, next month, or 6 months from now, I think that structure will tell us when we get to that point.
Tim, people complained to me that they had no warning of the March crash. And I said, well, obviously you haven't been listening to my interviews with Tim Wood, because clearly in February you were saying, Jim, this thing's about to tip over and capsize.
Right. And the things I put in the letter, I have people paying for a service. And so I can say a lot in an interview. But it's in print. I called it. I called the setup. And so, we will, my job as a technician is to understand what the structure of the market is telling me as it presents itself. And that's what I cover. And when I see that setup, I report it. And, you know, I've seen it time and time again. For example, the market was trying to set up back in October, and it was getting a toehold. It was taking form, I guess is one way to say it. And then we rebound a little bit coming out. I think it was, don't quote me on this, so I'm not looking at the chart, but I think it was October 31st, maybe October 30th. The market bounces a little bit into early November, and then it was on November the 9th, and we were still, below those previous levels. Everything was still trying to take form. November 9th, they come out with the news. Boom, we got a vaccine, about the vaccine. I don't remember what the news was, but it was vaccine news. And then just the other day, we saw a similar thing where market, again, it's trying. It's not quite there. It was trying to take form, and then, boom, all of a sudden, a stimulus, I'm not passing the stimulus package, and first of all, the stimulus package, I didn't even hear about it until like a week before, and it was just kind of some obscured noise out there, and then all of a sudden it's passed, and it's a $600 deal with, to the American people, and then, who knows what, I saw the pork in it to every other country on the planet. And that just come out of the blue. And so what they do is that's one of the forms, I say all that to say this, that's one of the forms of the manipulation that we see to keep this thing going, And okay, on the one hand, it saved the market another day, but did it fix any of this underlying stuff? No. And so the game continues, the bubble just gets bigger and tighter, and again, it doesn't fix anything. It actually makes matters worse, but when does the day come when all this stuff matters and they can't fix it? They can't, manipulate it like that with a piece of news or whatever. I don't know. But the structure, again, I come back to that. It's going to appear with structure, and I don't know when that's going to be. I'll know it when I see it.
We'll have more with Tim Cyclesman Wood right after this.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's the story for gold going into the new year?
Well, I think we have the 9-year cycle top. We've been waiting on that, and that's one of the things that we saw in 2020 was that top. It extended and extended and extended, and I say it extended, it just kept pushing. And I think that's because of the overall environment that we're in, with everything being pushed and extorted and whatever. But the evidence suggests that top is in, and we should see continued pressure, I think, on gold into the next 9-year cycle low. I think commodities, obviously everybody's talking about inflationary pressures, and they're pointing toward commodities in general as evidence of that, inflationary evidence. And from a cyclical perspective, I think it's just a counter-trend bounce in commodities. And I say that based on the statistics and the cycles and the statistics surrounding those cycles, I should say, on a broad array of commodity-related indexes. And so I think that's a bit of an illusion of inflation. And I also think that, a lot of that's being pointed to that there is a recovery that really isn't. And then the other side of it is with interest rates. If we were if we were truly recovering, then why are rates so low? You know, we're not seeing a true reinflation. What we're seeing is a continuation of the same old game and the levitation. And that's where we are. And as we go into 2021, you know, I don't know. I maintain that this is a ginormous bubble, that it's the biggest disconnect between the economy and reality with the stock market ever. And again, when we get the setup, be it next week, whenever, I don't know. But when my job as a technician is to identify that setup, which we did again in print back in February, and I think we'll be able to see it again when it happens here, and then understand the risk associated with that setup. And then the question becomes, okay, can it be saved once the setup's in place? Can they pull the rabbit out of the hat again? And you nor I nor anybody else knows that. We just have to identify the setup and then let nature take its course from there.
Tim, I wish you and your family a very happy and prosperous New Year.
Same to you. I appreciate you having me. Another year. Happy New Year to everybody. And, it's going to be interesting. I hear a lot of people, I see the comments, and a lot of people say, man, I'm glad to see 2020 gone and looking forward to 2021. And, like like 2020 was so bad, obviously, for everyone with, the economic issues and COVID and everything else that's going on. But, I say be careful what you wish for, because 2021 may be worse. We still have the uncertainty with the election, and I don't mean to get out on a political limb, but I'm not convinced of anything with this election, and I don't think this is settled. Is Trump really leaving? I don't know. I mean, I wouldn't bet on it. So I don't know which is worse. I mean, it's sweet. I think it's going to be a very interesting 2021.
Tim, thanks again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.